Hello everyone. I'll quickly give a very brief summary, like a 10-15 minute summary of the slides I had presented to the SYC tribe, and after that, happy to answer any questions related to how to balance job and equity investing, or even in general. Uh, so the primary question that we want to answer is that when we have a lot of competing priorities, how do we sort of do all of those things? In this case, a day job and equity investing, right? And I had shared the slide deck also a few minutes ago, so you can go to the timeline if you want to like see the slides also. But essentially, the very short answer is that like practice matters a lot, right? Because I've been doing a lot of these balancing acts in, let's say, college, even school life, that actually prepares me to do this even in my job, right? So I think like basically anyone that is finding it hard to balance has to start somewhere. Start small, uh, make a routine if that is what works for you, or try to allocate some time either every day, every week, or on weekends if you are unable to make time on weekdays. That's one part. The second part is this thing of like brutal prioritization. The idea is very simple, that if you really want to do something, you must always prioritize, because there will always be many competing things that want our attention, right? For example, spending time with family, uh, doing equity research, working on hobbies, reading books, health, fitness, social life, and job as well, right? So I think important thing is very consciously making a prioritization of like what are the things which are important to me. That's the first question that we should answer to ourselves. And many people might find 15% return is good enough for me. I don't need to spend more time. For people who are happy with 15% return, the easiest way to balance is to do index investing or something as simple as that, right? You don't have to either give management fees to mutual fund managers or small case managers. You also don't have to spend your own time. Because like if you think about it, the most limited resource is actually time, because like everyone has to die, right? So actually time is the most important resource. So we should really carefully think about what is important to us and then brutally prioritize. Like say ki, okay, these three, four things are the ones that I will try to tackle in this 1 year. Everything else I will park for now. Let's look at it later on in life. Right? For example, if I take my own case, I'm sort of a little fat or unhealthy, and for me personally, this year one of my goals is to become healthier, and many other things I might not care about in this year that I want to sort of improve myself on. That's one way to look at it. So this brutal prioritization aspect, looking if you look at companies, they need to do brutal prioritization. If you look at us as professionals, we have to do brutal prioritization. Businesses have to do brutal prioritization. So this is the one very important thing that we have to do as people in order to balance between job and investing, and in general anything else. The other important thing I talked about in the presentation is something called parallelization. The idea is very simple. If you look at your Windows XP computer from like 10, 20 years ago, you will observe that that computer had exactly one physical processor, one computer as they call it, right? But still it was able to run many things. You can play music, you can browse the internet, you can even play a game and do all these things sort of in parallel, right? And how is it able to do this? So there is the idea of parallelization. The core concept of parallelization is that it is not the case that we need to do exactly one thing at a time. We should carefully think about the physical aspect of things and the mental aspect of things. And we can parallelize some physical activities with some mental activities. Like, as an example, concrete example of what I do, I generally go for morning walks for maybe 1.5 hours. And that's a lot of time. Like 1 hour is like 5% of my entire lifetime if I spend it every day. And I try to parallelize that with something that I'm learning every day. It might be a podcast, it might be a SYC video, it might be a con call, it might be an interview given by a company I'm tracking. The point is, while I'm doing my morning walks, the physical aspect of it can be parallelized with the mental aspect of it, because the walking does not require brain power. while walking, anyway, what would most people do? They might browse their Facebook, Instagram, or they might be indulged in some kind of deep thoughts, or like overthinking on things, living back things and stuff like that, right? And we might as well use that time for learning something new, especially any kind of podcast or any audio kind of thing, because there, like, even our eyes are open and we can sort of be careful and mind the traffic, if that is the case for some people. Like, I walk in a park, so I don't face that. Like, there's no traffic I have to think about. But yeah, that's one aspect, right? The parallelization. Another thing point worth pointing out is, let's say, like, in my case, I'm a coder, right? I have to write code, like computer programs that result in these apps like Facebook, Twitter, Google, YouTube, and so forth, right? Now, the thing is, when you write this code, then you need to sort of run it, as they call it, right? You have to run the code. That takes maybe 5-10 minutes. So after I've written the code, I'm going to run it. It will take 5-10 minutes. Now, it's up to me what I do with that time, right? I can sort of sit in front of the laptop and do nothing, or I can start working on a presentation in that 5 or 10 minutes. So this is again a very important thing, that, like, ideally, when we want to be productive, we should try not to have any wide gaps in our time, because, like, basically brain is a resource, right? And if the code is running and I'm just staring at the laptop, then I'm wasting my time. I might as well use that time either to write a document, read a document, or to make a presentation, right? That's sort of the core principle of parallelization. That, like, again, as another concrete example, I love cooking. So if I'm cooking food, I might as well use that time to listen to the latest interview on CFA Society India, right? I shared that recently, where Abacus and Malabar investment managers were talking about how they rank corporate governance, how they measure corporate governance. And if I'm doing my cooking, I can parallelize it with this. If I'm bathing in the bathroom, I can carry a simple 2000 rupee speaker, Bluetooth speaker, and again, parallelize my bathing with learning. I don't have to, like, again, it's a personal choice. Some people might prefer to not do that, but, like, if for me to maximize the amount of information I can consume, I have to do that. So yeah. So another key aspect, having talked about some of these practical aspects, another key aspect to think about is, like, how this paucity of time sort of impacts the kind of investing that we end up doing, right? Those people who have a job. So, like, what are the characteristics of people who have a job? They don't have a lot of time, right? They have to balance between family, between job, and other things. Um, there is very little time to study companies, right? Now, how does that impact the kind of investing that we can do? So one thing is key, we should definitely look for some durable competitive advantages in the kind of companies that we want to invest in. Why is that? Because if you're relying on a company which is a commodity producer, it's much, much harder to track the demand and supply in those cases. For example, any steel investor, you can ask them, they would have to spend tremendous amount of time reading about the China policy, the world policy, what is happening in US, how is Biden's infrastructure push, and, like, basically track it at 500 different places, right? So many moving parts, right? Durable competitive advantage companies are probably easier to track because they have built those moats, those barriers to entry around their business, right? For example, if you're tracking Coca-Cola, or Indian example would be HUL, right? They have built those brands through decades of hard work. It's very, very, very unlikely that anyone would be able to disrupt them in a hurry or very easily. It will again take decades for people to disrupt those brands, right? So companies with durable competitive advantage is definitely something worth looking out for or thinking about, right? Second thing, valuation as a protection for capital, right? The idea being key, we want to be valuation conscious. Like, I want to be valuation conscious because if I'm paying up for a company, I have to very closely track its fundamentals and think about derating, right? What would happen if I'm paying 40, 50p for a company and it ends up disappointing on the business front? How will it get derated? I have to think about that, right? So that's why, like, I personally prefer being valuation conscious. Third thing is concentrated portfolio. Again, extremely important because for a person with a job, it's almost impossible to track 50 companies or 100 companies, right? So that's the reason that, like, I prefer investing in 15, 16 companies and going in depth, looking for durable competitive advantages, because that way I don't have to spend that much time tracking these 15 companies. Because do remember that even for tracking 15 companies, we have to actually track maybe 100 companies, or if not 130 companies, because you have to also think about their competitors and like how those competitors are shaping up, what are they doing, and so forth. Um, the fourth aspect is of simple companies, right? Like if you're tracking a company, you better make sure that you understand that company, and also that it's possible for you to track it with a very low amount of effort, right? That is why it is preferable to track simple companies where there are fewer moving parts, fewer things can go wrong, right? If you're tracking a company like ITC or Reliance, I frankly don't think how would one even do it. They are so diversified. For you to figure out how the overall uh, company will prospects will pan out, you have to track 5, 6, 10 different moving parts. Motherson Sumi, 100 subsidiaries. How does one track 100 companies inside of one company, right? Simple companies, tracking simple companies is obviously preferable for someone with a job, in my opinion. Then the fifth point is tailwinds. This is again extremely important. A lot of people give a lot of weight to moats and competitive advantages, and they're definitely important, right? But the other important thing is competitive advantages. Why competitive advantages? And tailwinds, right? More than competitive advantages. The reason that tailwinds are important is even when companies underperform on an individual level, if there are good tailwinds for the company, then essentially they take care of some of the mistakes that the company might make, right? That's the main point, right? Like, even if the company makes some mistakes, if there are strong tailwinds, then sort of the company can get away with those mistakes, right? If you look at, for example, the company Mastech that I invested in, uh, it won't stand out as a very differentiated business model or very high barriers to entry or very good competitive advantages. But there were a couple of factors that worked really well in Mastech. The first was the valuation. The valuation was really cheap. It was around maybe 17, 18 times trailing earnings. The second was the tailwinds. Digitization is such a secular trend, multi-decade trend, and it only got accelerated because of COVID. And even today, if you listen to these CIOs, CEOs talk about the needs of the companies, the digitization trend is not going anywhere. And just to give a sort of a rough ballpark for how big the opportunity size is, you might think that Amazon is everywhere, right? But if you look at Amazon sales, not just Amazon, but in general, the electronic retail as a percentage of total retail in America, it's only, I think, 18%, 18%, right? So imagine the amount of value shift which can happen from physical retail to electronic retail. And all those mom and pop stores who have to go online require digitization. And all of that will require some IT company somewhere to make investments, right? So the tailwinds are tremendous for IT. Um, the last part is, longevity of growth and profitability rather than looking for like pop in profits, right? Um, I am more than happy to look at turnarounds, but if it's going to be the case that the company will turn around, there will be a pop in profits, and then it will grow 10, 12%, that's not something I want to invest in, and I'll tell you why. The primary reason is after that pop, you will have to think about where to invest that capital, right? If I'm investing in a company, preferably I would want to stay there for 3 to 5 years because I want to amortize or sort of spread out all the hard work I have put in for researching the company over a period of 3 to 5 years, right? So that the pipeline remains steady, right? Imagine if I do so much hard work, I invest in a company, now the profits pop, I make profits, and then I have to sell out because after that point, it is not going to grow that much, right? I think those are not opportunities I'm personally very uh, finding very attractive. For example, Indoco Remedies is one such opportunity. HCG is another opportunity. They're not going to grow that fast. Like both of them might grow maybe 10, 15% or something, right? The general growth of medical expenses and medical infrastructure in India. Um, those kind of companies are not very exciting to me. Like there might be an initial pop in the profits. One might make double their money in a year or something. But then you have to keep doing that again, right? As a sustainable business model for someone with a uh, job, it's very hard. Uh, so that's about like how having a job impacts the type of equity investing one has. Um, so yeah, I think to quickly sort of finish this monologue and go into questions. I think eventually, like all of life is about capital allocation, and time is the ultimate capital actually, because all of us have limited amount of time. Potentially the amount of money one can make is unlimited if you look at the work that Elon Musk and Jeff Bezos are doing. I'm pretty confident both of them will end up being trillionaires individually at some point in time. So, amount of money one can earn is potentially unlimited, but time is limited for everyone. Balance is extremely important. Like one has to sort of balance between time for social demands, time for kids, family, and also investing and job, and try to have maybe blocks of time if that works for you. Another sort of productivity hack personally for me, I try to listen to con calls and podcasts at maybe 1.25x or 1.5x. That is another key reason why I generally prefer not to attend live sessions anywhere, because reality occurs at 1x, and that's time, right? And I'm sort of not utilizing my time best if I'm listening to reality at 1x. It's much more efficient to listen to reality at 1.5x. So a lot of the videos, educational videos, I would prefer to watch it at 1.5x, and like try to save my time. Um, yeah, I think that's about it. And if anyone wants to ask questions, please sort of raise your hand or something. Like I don't remember how do you ask questions, but do raise your hand, and I will try to sort of make you a speaker, and you can ask your questions. Hi, Dr. Dhiman. I have approved your request to ask questions. Yeah, I think I am sort of approving. Oh, there are now 6 requests. Let me quickly, try to find them and approve. But Dr. Dhiman, are you able to ask questions? Because I've approved you.
Hello.
Hi, Akshal.
Yeah. Hi, Sahil. How are you?
I'm good. What about
Yeah.
you?
So thank you for taking this session, and I think it was long overdue since the video with SYC came out. And so I had a couple of questions. One was relating to balancing investing and job, and one was related to the longevity and the intermittent fasting, the one meal a day that you're following. So if you allow me, I can ask both of those. I can ask one, and I can come back later.
Yeah,
Hello.
please go on. Please
Yeah.
ask your questions.
Yeah, sorry. So the first question regarding investing was, so like you've seen that you usually track those companies which have a good track record and are very much good with their disclosures. So what do you have to say about those companies? Those do not put out, let's say, the investor presentation, or they don't put out detailed annual reports, or don't conduct con calls, and they are sub market cap. So let's say it's a 150 crore market cap. The company is interesting, but there is not much information to analyze or to review. So how do you build conviction on that?
Basically, for these kind of companies, has to take a lot of time to talk to fellow investors, do scuttlebutt, talk to as many people that know something about the company, right? So obviously, it's harder to build conviction in these companies, and we have to talk to other investors, because someone that has put their hard-earned money must have also done their own due diligence, right? So that's one sort of a quick way to come up to speed. Apart from that, we should always try to build connections wherever we can. So if we can figure out who are the suppliers or the clients for this company, try to find someone in that ecosystem. But essentially, the most important thing for these SMEs or micro caps is actually to talk to as many people as you can. uh, definitely the investors in that company. And if possible, if one has that kind of access, then the management would be obviously the most important thing. But then that might be hard. So, eventually we have to get there. Like, we can't get there on the first thing.
Understood.
Yeah.
Yes, Sahil, can I go
Yeah,
next?
please. Yeah. Go on.
Okay. So, Sahil, as you said that time is the most precious thing. So, thanks a lot for spending your precious time for having this session. Thanks a lot to you.
Thank you. Thank you.
Sahil, thanks for pointing out that basically, I know you can't have a solution for every job issue that we face, but yes, that causes a bit of stress. Largely, my overall point that I want to make is uh, that a job stress causes an issue in my investing decisions, is what I feel. So, what I mean there, number one, I mean, these are maybe psychological issues related to job or not a job. I mean, that you can just point out if you have solutions to this. Number one, I feel that if I analyze a company a lot, read its annual reports and all, then I tend to be positive on that company automatically. I mean, if I say 2 or 3 weeks on analyzing a data, playing a devil's advocate becomes a challenge. Even if I see something negative, I may still be convinced, that I have to invest in this stock simply because I have spent a lot of time on it. Do you see that this is a problem or it's just me? Number two, we are aware about the toxicities of our jobs. At times the pressure is so much, and uh, it basically clouds our judgment. That okay, I had a bad day today at work, or last week was being month end, it was very hectic for me,
Yeah.
and it just exhausts you so much that you can't uh, invest more time for your investing and your long term stock plannings.
Right.
So these are the two issues I feel which I have not been able to address at all.
Right.
So if you have any solutions, it will help me.
Yeah. Yeah. Uh, can you quickly just remind me what was your first question?
So my first question was, say for example, you picked up on Motherson Sumi or any other company.
Okay, I
So
remember now.
psychologically, I feel
Yeah,
that
I remember now.
yeah,
Yeah, I remember
yeah,
now that like if you read about the company, then you become positively biased and you are sort of buying their narrative, right? That kind of thing, right? That was the question. Like the
yeah. Basically, we feel that since I have spent so much time on this talk and we keep trying to find positive news only, it is very fine to find something negative. And if we even if we do, we psychologically tend to avoid it.
Right, right, right. Right. Essentially, yeah, what you're talking about are like two important biases. One is the ego bias, and the other is the ownership bias. And in fact, Arjun Badola was doing a space yesterday. He talked about the exact same thing that, like, and I have experienced this too personally, that, like, once I buy a company, uh, I would tend to be more sort of positively biased about it. And even before that, if you have just read about a company, you might end up being positively biased because think of it this way: every single company is trying to sell a narrative, sell a story. They want to have investors, they want to have valuation, right? They might not say it explicitly, but like they do eventually. Maybe not directly, but like as a result of their good work, they do. So my point being that yes, you're absolutely right. Which is why what is sort of most important in my opinion is to talk to the seller also. Someone somewhere is selling that company, right? And try to actively find the sellers. Who is selling that company? Or maybe have that ecosystem around you, other investors that you can talk to, that you trust, who can give you an honest opinion on it, especially for your own portfolio companies, right? Like, let's say I own IDFC First Bank, and maybe 90% of the world is against it. 90% of the world thinks it's not a good investment. So I should definitely talk to them. I cannot tune them out. If I tune them out, then, what if it's actually not a good investment? So I think the very first starting point of overcoming these biases is to understand that investing is actually a probabilistic art. And basically, it's not a deterministic art. It is. It would be wrong on our part to think that we can ever read enough to deterministically know what will happen in the future. That can never happen. That is outside the realm of possibilities. Even the promoter cannot say what is going to happen to the business. In fact, There are many books that have come out, like, Good to Great, Built to Last. And if you read the counterpoints to these books, you will realize that all these businesses that the authors thought were great, were built to last, actually did not end up lasting. So it's actually extremely hard to build businesses that last over, even let's say, 10 years. Forget about 20, 30 years. My point is, even if the promoter cannot predict about their business, how can we as outside investors who don't know about those inner workings, how can we predict, right? I think it's sort of like that probabilistic understanding sort of, I think, brings humility to investors. We should always be very, very cognizant of the fact that I'm taking a probabilistic bet. It might work, it might not work, and we have to be prepared for that outcome, right? Now that if you have acknowledged that there is a probability that it might not work, then of course you should try and look for the reasons that it might not work, right? So, like, let's say in my mind there's 70% probability that this will work out as a good investment. That means that 30% there is a probability that it won't work out as a good investment. There must be some causal reasons that it won't work out as a good investment. And I must strive to go and talk to anyone that is willing to talk to me and try and understand why it won't work out as a good investment, right? That is what gathering antithesis is all about. Step number one, you acknowledge that it's probabilistic. Step number two, you imagine that, if there is even 20-30% probability it won't work out, shouldn't I know the reasons that it might not work out? Eventually it might or might not, but you should know both sides of the story. So that is why, even for me personally, it's very, very important that I should have the best antithesis for the company that I am invested in. Even the seller should not know as much about what can go wrong compared to what I know about what can go wrong as an investor. Because you can only lose money if you have invested money in a company, right? For the seller who is not invested, they might not make the gains, but they cannot lose their money, right? So I hope that helps a little on the first point. Uh, on the second question, can you just repeat that? And I will also request the sort of the future speakers to give one question at a time, because, like, basically I start thinking about the question and find it hard to retain the second question. Can you just please tell the second question again?
Sorry, sir. Yeah, I think it's unfair. So you have given me a good elaborate answer to my first question. Maybe we can give a chance to other speakers then. I can take up the second question if there is
Sure,
time.
sure, absolutely, absolutely. Yeah, yeah. Uh, Anyone else wants to go, please, feel free to raise your hands and, like, let me know. So I think, Abhijit, you can go, because I don't see anyone else raising their hand, or maybe is something broken
Okay.
in this. But yeah.
Okay. Thanks for that. So, Sahil, like I believe that stock market is more of a mind game. That is what I understood over the years, and I'm still a learner. But yeah, mind plays a very important role, is what I feel. So, uh, there are certain challenges that our personal life also clouds our judgment, whatever is happening in our life. Just as an example, obviously this is extreme that I lost my dad in April, and I sold off all my stocks because I thought that I can't handle money, because emotionally I was very weak, even in a day to day things. So like when we are dealing with our jobs, there are things that happen that are unfair. We had a bad week, so these psychological things. So suppose like I had a bad week, and I feel that that is not a good time to go through stock analysis and all. Even if I try to push myself, I probably won't get the good results. So just to be short, like there can be moments of toxicity in the job. There may be challenges that we are facing in our personal life, and handling these things. So I know meditation and all can be a certain thing that can be looked out for, but specifically with regard to job toxicity and its impacts in clouding our judgments, be it stock picking or analyzing. So if you could speak something on that.
Yeah, thanks for the question, and sorry to hear about your father, and my deepest condolences on your loss. It's sort of unspeakably sad, and like, I cannot imagine how it would impact me, like whenever I have to face that. Um, but I think, like, especially on the job toxicity aspect, and I've seen this even with my own wife. Like, she has also faced many toxic managers actually. I'll just sort of quickly request to take a small, because I don't see those requests. Actually, it says there are 4 requests to speak, but I don't actually see them. What I'll request people to do is please send me a DM, and sort of I will invite you to speak. It might like be easier to do it that way. So just send me a DM right now, and I'll like invite you to speak after this if you want to have a question. But now to continue on your question on toxicity in job, um, like there are a couple of points we should really focus on in my opinion. One is there will always be toxicity and negative outcomes around us, right? Like if someone thinks that there's a fairy tale, there is no fairy tale. Everyone suffers from emotional losses and sort of that either someone being toxic towards you or the life being unfair to you, those kind of things. I think I agree with you that like meditation, but I think more than that, personally, to me, what has helped couple of things is reading books. Any kind of books you can read which can help you find peace in your life, right? Or maybe the purpose of life, those kind of things, right? Sort of figuring out. But I think the second most important point is just the acceptance of this reality. That like there will always be toxic situations, toxic people around us. It's just the way it is, and like basically we should try not to give too much importance to the negative outcomes and try to focus on the positive and try to compound the positive, right? If we focus on the positive, we'll figure out there are positive things also in life, right? And probably it's worth thinking about them more than the negative things. But I also understand that it's sort of easier said than done. It's not that easy to do this, and like especially when we face very large losses, emotional losses, it's very hard. So yeah, I think this is a like really hard part. One thing I will add is it's worth for sure, in my opinion, trying to find a job which is promoting healthy kind of work culture, because that allows us to realize our full potential even outside of our work. So definitely, in my opinion, it is worth even settling for a lower pay if we can actually be more peaceful. So if I were offered X amount of salary at a company which is toxic, and let's say 75% of X, so 25% lower pay, the company which is have a better work-life balance and better environment, I would pick the 75% wala company any day, because it allows me to remain peaceful. Eventually, what's the purpose of earning more money if we are going to remain emotionally pained, right? So I personally would always prefer that, and I think like that's something that again people should probably be very conscious about and try to think about.
Thank you, Sahil. Thanks for that.
Yeah. I see Abhishek, Arun, and Kushal. Let me try to promote them if I can. Oh, Abhishek is already a speaker. So, Abhishek, please feel free to ask your question and I will try to promote others.
Hi, sir. Thank
Hi.
you for letting me speak. Yeah, I just have a normal question like, how do you manage your time for like job and also equity, also for the family, and how do you, I mean, schedule the time for everything and match it according?
Yeah, basically, just to sort of give a quick, day in the life kind of thing. Like what I try to do is I try to wake up at 6:30 or 7. Then I'll try to do maybe 1.5, 2 hours of morning walk, and parallelize that with the investing part. So I'll try to read a investor presentation and annual report, or listen to a call for those 1.5, 2 hours, right? So that's sort of killing two birds with one stone, because I'm actually able to focus on the health and also on the investing part, right? So I think those are really important. Apart from that, like then I'll probably start working around 9 or 10 a.m., work until 5 or 6 p.m., and then maybe spend around 2 hours or so with family, uh, and then after maybe 8 or 9 p.m., spend 2 or 3 hours with my wife, and maybe watch some TV and relax, and then try to sleep by 10 or 11 p.m., something like that. My point is कि like सबसे पहले तो we should know what is important to us, right? And by the way, if any of you want me to speak in Hindi, let me know. I'm okay with that also. I'm speaking in English so that if someone only knows English, it's sort of easier for them. But yeah, the point being कि first of all, we should know what's important to us, right? My priority for this year are family, health, uh, investing, and job, right? So I'm only balancing between them. Now, let's say if my parents tell me that when are you having a kid, I'll tell them definitely not this year. Let's talk about it next year or after that. My point is like that's how we have to try and prioritize things. Try to understand what's important to us at this moment right now. So that's. I hope that helps.
Yes, sir. Thank you.
Thank you. Yeah, anyone else, please feel free to unmute yourself. I think some of you have been promoted. I think I
Hi,
will.
Sahil.
Yeah,
You can hear
I
me?
have. Yeah.
Hi. So it's actually I saw your video on SYC2. It was great. So for me, I you just answer my question. Let
Sure.
me ask this way. So I'm actually in starting point of my career. I just started to earn. So you told that you can do parallel things. So while working, you gave example. While working, you can listen to podcast or while sit
Hmm.
or sitting idle, not being sitting idle. So just started my career. So how can I actually do parallel work? So while I'm working and I'm listening to podcast, both the productive work will be low. So how to overcome it?
No, actually, I didn't mean to say that we should listen to podcast while working. I meant to say that we should listen to podcast while walking. If you are doing a morning walk or an evening walk or some kind of exercise, right? Or maybe you're in the gym. At that point, it's possible to listen to podcast or listen to a conference call, right? That was my point. Of course, while we are working, we have to pay 100% attention. Otherwise, it won't work, right? If we are not paying attention.
Okay, thank you.
Yeah. I see Jazzy. I've approved your request to join. I might remove some of the speakers who have had a chance to speak so that like others can also join. So please don't feel bad about it. You can always come back. But yeah, please go on. Jazzy, are you there?
Yeah, hi, Sahil.
Hi.
Uh, yeah, so basically, I'm also kind of a new investor, and the thing which kind of bothers me that being someone from an engineering background, I don't really have such a good grasp of uh, balance sheet, cash flow statement. Though I still understand, but again, at the end of the day, understanding business is a bit easier, but understanding the balance sheet and how it impacts your investment. I can also understand the ratios because they are fairly easy to understand. But how did you uh, get around to it?
Yeah, let's talk about it, right? I think there are a couple of really important things to keep in mind. First is that I think the best way to learn is actually to read. There is no other way to learn. So basically, go into an actual balance sheet and an actual profit and loss statement and read through each and every line item and ask yourself basically what could this have meant? What is this number? And if you don't understand something, then just Google search about it, right? That's the easiest way to understand it, is to actually just go and do it, right? Now, I agree that, some of the balance sheets, some of the P&L might be complicated and we might not understand it. And those parts, of course, we have to rely on books or some kind of learning resource, right? So in my case, there is actually a very good thing called Zerodha Varsity, which basically has a lot of content on fundamental investing. So there they will explain for each and every line item, like let's say, change in inventory of finished goods, things like that, right? Which to an engineer, you don't know what that means. But they will actually explain for each and every line item what it means by actually walking through an example balance sheet. So by reading through all of that Zerodha Varsity kind of thing, you actually understand what it meant, right? So I would say that's one very easy place to start. There might be other free resources, but in my case, Zerodha Varsity was pretty good. So that worked for me. Um, but apart from that, of course, there are many, many paid courses also, which one can take, for example, SYC. And of course, there, Ishmohit will talk about what are the balance sheet and profit and loss items and what they mean by taking examples.
Right, right. Thank you so much, Sahil.
Thank you. Uh, Kushal, I will try to add you, Kushal and Abhishek. I'm not able to find you. Kushal. Uh, I wish they had like a search button or something to look at everyone who's listening. But sorry if I'm not able to add you. I am trying to add you. Uh, yeah, just give me some time. Sure. Oh, there probably is a search button. No, it doesn't work. I tried searching for Kushal and not able to see. But let me approve people who are you directly asking in the app. So I've approved. Uh, Prateek, please feel free to ask.
Yeah. Hi, Sahil.
Hi.
So, Sahil, my question was like, I'm like 10 years into IT, so the workload and everything is there. So, you said that in morning you spent around couple of hours. Is it the only time you get to like read or anything? And in weekends, is it like more hours or like that?
Yeah, thanks for the question.
Yeah.
Actually, there are a couple of things here. Like, one is I'm personally very motivated by the opportunity cost. So, if I find a company which I love, in the sense that the opportunity is there, right? Like, I find that it's doing some high value work, some barriers to entry exist, valuations are in my favor, then I
Right.
get excited. And I
Okay.
would try to spend as much time on it as possible. I might, let's say, even on weekdays, I might spend less time with family, spend less time watching TV, and spend more time reading annual reports. Weekends, obviously, you're absolutely right. Like weekends are a very like open space. So on weekends, I can spend maybe 6 hours, 8 hours. But a lot of it actually depends on the opportunity also. So like recently, you must have seen that the entire US tech has crashed. Not so much the fangs, but like the mid and small tech in US.
Right.
Uh, and that presented such tremendous opportunities. Some of them have crashed by maybe 80%, 75%, right? So that again, like it spurred me to read. And I'm studying three companies right now. So in that way, like basically it's a dynamic thing. So if I find
Okay.
something worth reading, I will try to sacrifice other things and read it.
Okay. Thanks, Sahil.
Yeah, thank you. If any of the speakers has not yet asked, please feel free to unmute and ask. And in the meanwhile, I'm trying to add other people who have sent me DMs. It's just a very bad interface. Yeah, Kushal, I did search for her name, but it didn't show me. Let me try again. Kushal. Yeah, yeah, this is such a bad UI. But please speak, like whoever unmuted. Yeah.
Hey, Social, what is your view on GTK Prestige? after it split was announced. Like I have been watching this stock almost 2 months. What is your review on this one? And one more question I thought of asking, which book you recently read and reading now?
Yeah. TTK Prestige, to be honest, I haven't studied the company, so I would, if I haven't studied, I would not want to give an opinion on it. In fact, recently in a tweet, like someone asked about Tejas Networks, at like, what are your thoughts on Tejas Networks? And because I had said ki I feel like I've missed an opportunity, and basically I haven't read it, so I don't want to give a answer based on just like guessing and hearsay what I've heard from others. Um, with TTK Prestige kind companies, like my bias is that they are not growing that fast, and if they're not growing that fast, I don't find it very like. Why would I want to invest my time investing unless it's going 20-25%, right? Because of 15%, I can invest in a index fund. That's the thought that I have. But like that's like my bias. Uh, but the second thing you said is on books, right? So I'm reading many books actually. There's this one book by Michael Mauboussin called More Than You Know. Essentially, it's about the role that skill and luck play in our lives, and how over time the importance of skill keeps going down because everyone keeps getting upskilled and the differences between the best and the worst keep reducing. Like one of the concrete examples he gives is when you look at the marathon winners, right, over time, maybe 50, 60 years ago, the difference between the marathon is like a 42-kilometer run, but the difference between the marathon winner and, like, let's say the 10th person was something like 30 minutes or 50 minutes or some very large number, right? Now it's down to something like 5 minutes. That tells you how extremely competitive things have become. And his point is that over time, most human endeavors will become that way. They will become more commoditized, more because that's obvious, right? Everyone keeps learning, everyone keeps improving, and then the differentiation between the best and the 10th best keeps reducing over time. So I think one of the key things he says is that people have to keep evolving, keep going to new frontiers. You cannot like rest on your laurels, basically. Uh, that's like one investing related book that I am reading these days.
Thank you. Well said.
Yeah. I think Priyansh, would you want to go next?
Yeah, thanks, Sahil. I have been a long time follower of your tweet, and thank you for uh, sending out all those tweets to add value to the bigger investing community. My question is more around your career, right? Given that you have quite a in-depth knowledge of equity research as a whole, so haven't you tried for a long-term career moving out from the tech?
I give you the honest answer here. Basically, there are two problems with that. One is the kind of remuneration that tech gives you, like especially FANG kind of tech, it's very hard to get that kind of remuneration in equity investing. I would have to be like a PMS manager or something to get that kind of remuneration, right? And like, why would anyone want to give their money to someone who doesn't even have a CA or a CFA? There is so much I would have to do if I wanted to switch my career, right? Then the second problem, managing other people's money is insane amount of responsibility. I have only been doing this for maybe 2 years, right? I don't feel comfortable even managing my parents' money. Why would I want to manage a random stranger's money? Because it's a lot of responsibility. You don't just want to take people's money and then not invest it wisely. So maybe I might consider it 20 years from now, but like definitely not in the near term.
Yeah, thank you,
Thank
Sahil.
you.
That answers.
Thank you. The search feature on this thing is really, really bad. I'm trying to add some speakers directly, but it doesn't work. If anyone wants to request, please feel free to request while I'm trying to add Kushal Jajodia ji. It says that there are 9 requests to speak, but I don't actually see any of them. It's quite sad state of affairs. There's 0 requests to speak that I see. Yeah, but if anyone is able to actually request again, please do while I try to add others. Okay, Kushal Jajodia ji, I have sent you a invite to speak. If any of the other current speakers want to ask a question, please do while I send an invite to others. Ganu23, I'm going to send you an invite right now. Yeah, done. I've sent an invite to Kushal Jajodia ji and Ghanshyam Rai ji. Hmm. Uh, Subhranshu 1012. I'll try to invite. Yeah, Ghanshyam Rai ji, please feel free to unmute and speak. Ghanshyam Rai ji.
Yeah. So, Sahil, thanks for this space. Actually,
Thank
I
you.
didn't see your the last video with Ismohed, so I do not know the context. But my question would be like, see, the difference of emotion when you're not investing or doing the research on the equity, but you're in totally into job, right? So, do you see any kind of difference in emotion doing this in parallel right now, or also do you see any kind of performance impact on your job with the current investing?
I don't see any impact.
So no change in emotion also. Like, see, if you want to see if you talk about 24th February or 7th March or something, because see, I agree that long-term investing is going for the long-term period, 5 year, 10 year, and only taking care of the fundamentals of the business. But still, do you see any kind of emotions flowing through?
I don't actually. I don't see. And I think there are actually like 2 things to keep in mind.
Mm-hmm.
One is that I just started out maybe 3-4 years ago with my job. So I do have that at the back of my mind that even if I don't do this well, I can always sort of earn it back, right? So maybe after 12 years, I might be much more careful.
Mm-hmm. Yeah.
That's one way.
Yeah. Okay. All right. Thank
Yeah.
you.
Thank you. Baliram ji.
Hello.
Hi.
Thanks for giving me opportunity.
Thank you.
I'm I'm actually now working in a MNC automobile company and parallelly study and lot of companies. But there is a confusion among the job and the investing career. There is no time space for the investing while doing the job. Is it right to switching the job in or giving to 100% work, 100% time in investing?
Yeah, actually, you have asked a pretty good question, which is like, how should we allocate our time? And in my opinion, like, if one has a path to have a better job, have a better professional career, it is
Okay.
definitely worth pursuing that. Because
Okay.
basically, if you think about it, with every promotion, our salary might go up 15-20% or something, right? And that is
Yeah.
like
Yeah.
a permanent change in our net worth for the entire life. Whereas for
Okay.
investing, for us to do well, we have to keep putting in more hours each and every year. We cannot
Yeah.
rest
Yeah.
on our laurels in investing. Whereas once we are promoted, we are sort of at the next level in life. So I personally think that definitely, like, if there is that scope that we think we can put some effort and get a promotion, probably it's worth doing that. But at some point, you might feel ki, do I even want to get promoted beyond this? Because every incremental promotion will also come with more job related stress, more amount of time we have to give to the job, right? As an example, I can afford to work maybe 8 hours a day or something, but I don't think my manager or my manager's manager can do that. They have to work much more than that. At one point, one of my older managers used to work from 7:30 a.m. to 10:30 p.m. Do I even want that
Yeah.
for myself? I don't think I do actually. So at one point, you
Yeah. Yeah.
might
Yeah.
think, ki, okay, now I'm sort of more comfortable and I can put more time into investing.
Yeah. 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 Okay.
Yeah.
Okay. Okay, sir.
Thank you.
Thank you.
If anyone else wants to speak up, please feel free to unmute and speak.
Siddharth, now Sahil, and now I'm the speaker. Can I
Yeah,
speak?
please. Yeah.
Uh, Hi, Sahil. Good morning. Good morning, everyone.
Hi.
So, Sahil, it's not a question. I wanted to share my experience because I have been a long term investor since 2016, and I was there in the job then, and I've built a good portfolio now. So, with your permission, can I share my
Please,
experience?
please, please do. Thanks so much for sharing. Yeah.
So basically, there are two aspects to it. Uh, as you rightly said, the valuation of the company, and the first most priority is discipline, and one should be a long term investor. So if one is in the job, he or she cannot avoid the simplicity to do trading. When I initially started my investing journey, long term was for me like 8 months down the line. But when I got deep into the company, and I am a very different type of investor. I buy big quantities in selected 2 to 3 companies because it's more comfortable to me to study those companies. I cannot keep like 20, 30 stocks in my portfolio because I'm not able to concentrate each and every stock. So likewise, many of them might be having different stocks, but I'm speaking about my experience. So I basically from 2016 to fag and 2020 post COVID also, during the span of 5 years, I just purchased that 2, 3 stocks I had in my portfolio. I had approximately 6 downturns, and with God's grace, I came in the market when it was a bear cycle going on in the small cap and the mid cap sector. So, a disciplined investor, one should be very disciplined and not should do trading in the field when you are in the job. Because what happens, ki if you start trading and not being in the long term as a long term investor, you will always be stuck in the two minds because losing money, even on the unrealized losses, it becomes a toss and you are not able to concentrate on your job, which should be your focus. So at the end of the day, I see myself. I after 5 years, and in 2018 I have started my entrepreneurial journey also. So I have a very good portfolio right now,
and still haven't sold those stock, because every 2 years down the line you have something, but it drastically changes your valuation patterns. So I would suggest everyone, as per my personal experience, to be a long term investor and not do trading during your job cycle. Thank you so much, Sai.
Yeah, thank you so much, Kushalji, for sharing that. I think that's a very, very, very important learning that you have shared with us, and it actually teaches us multiple lessons. One is definitely like the power of concentrated position sizing, conviction that we are able to build, and then taking those bets, right? Those large concentrated bets. The power of holding through those downturns, which obviously are extremely gut wrenching. It's because the problem is during the downturn, we don't actually know what will happen in the future. We obviously have high hopes because investing obviously is a profession of hope, basically, right? We are all very optimistic about the future. Otherwise, we would not be investing, we would be shorting companies. And but of course, at that point during the downturn, we don't know, especially if it's a company specific downturn, right? Those are the ones which are most gut wrenching. If the entire market is down, we can still convince ourselves by saying ki it's okay, the market eventually has to rise. But if just that company is down, those are the ones which are like very, very hard to go through. And thanks for sharing your experiences.
Thank you so
Thank
much.
you. I've sent the request to a couple of other people. I've sent it to Kalyanji and Subhranshuji. Please do try to accept and ask if you have. I'll send it to Arun Siva 4014 also, just right now. Uh, Ghanshyam ji is saying, can you also share trading versus investing along with job? Because investing along with job can be done, but trading along with job in long term will be very much difficult. So I actually agree with you, Ghanshyam ji. Actually, I mean there are a couple of points to be said about trading, right? Someone asked me recently, and actually I'll point out another very important and sort of very interesting point. Recently, I was attending a investing conference with some of the really, really good investors, and so I'm trying to understand what their processes are, how they do it, and stuff, right? And in that conference, there were many traders also. And one thing I got to learn is that trading or momentum kind of positioning, if done well, can actually generate the highest amount of CAGRs, much higher than investing does. Then, one would think, why not do trading? I think there are a couple of points to be said, right? One is the psychological aspect, the emotional aspect of trading is very different from investing. The reason is in investing, at least we have a story to tell ourselves. The company is becoming better at lower prices, it's more attractive. With trading, it's very hard when it goes against you because it is completely a black box, right? You have some pattern recognition, you know about charts, you know about patterns, and then you're hoping that the pattern pans out. If the pattern does not pan out, then you have lost your money. There is no redeeming it, and you're sort of just done with it, right? So I definitely agree with you, Ghanshyamji, that like I think trading is hard, especially for me personally. But then if people can handle those psychological aspects, then that's okay for them. And like there are, as they say, there are multiple roads to nirvana. There are many ways to heaven. It doesn't just have to be one system, right? Whatever works for people and whatever works for everyone. I've sent the request to Arun Sivaji as well. Uh, Please feel free to join and unmute. Rajesh Kapil 13 is also asking me to add him. I think he has also sent his question on. chat itself. Can you please explain how to keep conviction with some of the stocks that we keep in our concentrated portfolio, even if they don't move for some time, like Indoco, HCG you mentioned? How do you feel about FOMO? So I think there are a couple of points here, like right. One is ki if the business is performing, that is the only thing that I, as an analyst, can think about and reason about, right? The stock price doesn't work, it won't work. But that is why I prefer to have a portfolio of 15 to 16 companies, right? It's possible that the business is doing well, stock price is not moving for some time. And for me personally, this has happened in, let's say, IDFC/IDFC First Bank, where I personally feel the business has been doing very, very well, but the stock price has not done well. And even if you read people's antithesis, they will just talk about the stock price, that why hasn't the stock price worked? That's the entire antithesis. So I feel like the conviction part should be there, but this is why it's important to not be married to the idea. Number one, like I can go wrong, right? Maybe the market knows something which I don't know, and I need to be very prepared for that outcome. Which is why, like, I would not want to add to a losing position in the name of averaging down. Like, let them get even better numbers. Let them blow all expectations out of the park. And then eventually the bearish analysts or the bearish mutual funds will be forced to turn bullish. And that will be the point at which I would want to average them. Otherwise, let it become a smaller part of my position, right? Why would I let it, if it has to lose, let it lose. I don't have to keep, putting more money into the loser until it starts winning. When it becomes a winner, then I'll start putting more money. That's like one point. Um, so yeah, I mean like that's how I think about it. Yeah, Kalyanji Singh request is not visible. By the way, if any of you want to ask questions directly in the chat box, please feel free to do that also. Masters, like Abhinav, I had actually added you as a speaker. I don't know what happened. Maybe it's not working. It's just such a bad experience. People keep dropping off, unfortunately. Like that's the problem with spaces. But yeah. If anyone wants to ask the question directly in the chat box, please feel free to do that. That's probably like a sure short way to uh, get the question answered. Novins Abhijit, you please feel free to unmute yourself and speak. I have approved your request to join. Uh, Vikrant Upadhyay ji is saying, can you speak about coffee can investing, provided you are okay to go off topic? Vikrant Upadhyay ji. Vikrant, let me put it this way. Like I have actually explored this aspect of investing, like coffee can and stuff, right? And especially like for me personally, the motivation to do this coffee can thing was ki, like, I'm just sharing my motivation. Ki whatever money I have in, let's say, bank fixed deposits, some part of it can I put it in a coffee can portfolio, and that way it can earn more return than whatever bank FD gives. That's what I thought initially, but then I discarded that idea for two reasons actually. One is that ideally your fixed income kind of product part of wealth should be at like zero risk ideally. Reason being, all that money is needed for things like emergency, right? And you would not want to sell your equity part of portfolio at a market downturn. So emergency can happen even if market is down 50%, and I would not want to sell at 50% loss because there's an emergency. So that's one reason I discarded. Other thing about this coffee can approach is that I fundamentally don't agree with the idea that some company can be bought and then you can forget about it. I personally don't think any such company exists. Like you can give me historic data points, but then the point is ki it's hard to predict for the future. You can look at the past and say ITC, British Tobacco Company, and all have survived for 50, 70 years. But how do we predict for the future? I think it's exceedingly hard. So I don't agree with that. Other thing is, even if you look at the PMS managers who buy companies like maybe Nestle, they will try to justify their investment by saying ki the free cash flow will compound for 25 years at 20% or something like that, right? Again, I think like it's very hard. Like you can make an Excel model and say anything. I can say that Google will compound at 25% for 20 years. And should I buy Google at 70p? That logic doesn't work, I think. We have to be realistic about investing. I think like most people realistically only have a real insight into up to maybe 5 years of a company. After that, it's very hard, and even 5 years is very hard. As a sanity check, ask yourself if you could have predicted your life in 2017, whatever you are experiencing in 2022. I don't think I could have actually. Like in the last 5 years, so many things happened. I met my wife for the first time, and then I married her. Right? I couldn't have predicted all these things will happen. So, like I think it's very hard to buy coffee can kind of companies, at least for me. For me personally, it will always be you buy and then you track every quarter. So someone might say, "Okay, I want to buy Nestle today," given that it's a strong franchise and all that. Very like investors who are not looking for a lot of risk, so they're all comfortable with low returns. I'll buy it today and then I'll track it every quarter. That's a different thing. Like that, I can probably still kind of agree with. If one can do that, but yeah, probably not the other one. And Abhijit, please feel free to unmute if you have a question.
Thanks, Sahil. Thanks for the second chance. So yeah, it's good. I'm lucky that just from this point that invest and forget. Even I agree that it's a bit different now. So I would just like to give you some background first before asking my question. So like as a newbie or as a learner, I feel that the first thing I should do is protect my capital rather than focusing on my profits. Because if I just focus on my profits and greed takes over and I lose my capital, that's a bad thing. So in the obviously long term investing helps, but I need to protect my capital. So two things here. I believe that earlier, say people keep repeating that the 80s and 90s. I think probably at that time this invest and forget thesis worked because businesses were quite different. So like Bajaj Auto had a huge demand, but they didn't have things to supply. Now it's a different thing. They have 10 competitors in place. The product cycles are smaller. Secondly, we so when I'm investing, I'm basically going against a huge chunk of crowd. Someone like the big investors, the big names that we have, the Rakesh Jujunwala, they are just a call away. They can understand a company's strategy just by giving a call. But if I try to call the Titan and all and ask them about the future strategy, they will not even
Hmm.
entertain me. So from that perspective, how do you define your exit strategy? Because if I invest in a stock and uh, suppose I'm proved wrong, how do you define an exit strategy? If you have one, if you could just share that when we go wrong, how do you go about it? And basically, then it points out how do you allocate overall? Because as you said that we can't be averaging, we can't keep averaging our losers, because that will basically be like digging a grave for
Right,
us. And when I say exit strategy, it also means on the upside. In one of your slides, you have mentioned that valuation play a role. So maybe if the PE of a company is going up, maybe it may be time that valuations are too stretched and to exit it. But on that point, also, I have one question. So at times, what we see is that the news follows after the price.
right,
So the insiders already knew about a development, they bought it, the price is up. You feel, oh my god, the valuation is stretched. Let me exit, and it may work the other way. So I understand there can be a perfect thought to
right.
it, but if you could just highlight on these two aspects, what can be a good
Right,
approach?
right. And in terms of the exit strategy, right? I mean, that's why the antithesis is so important. We must know precisely the things that can go wrong for the company. And we must know, even more importantly, why we are investing in the company. What are the key variables for me to get right in order for the company to do well? Right? That's what we have to understand. Right? And if I have the thesis and antithesis in front of me, and then things start going wrong, then I can sort of figure out ki, okay, now I probably should be selling, right? Like taking an example of Web of Global. Again, the thing about investing is, if everything was as simple as a formula or a simple flow chart, then actually everyone would have done that, and the like everyone would have done that, and the prices would never be at the places where they were, right? As an example, like if everyone were following the same thing, it would not happen that way, right? Which is why, like, basically everyone has to have a subjective call on the direction. Like, let's take an example of Web of Global because it's a wonderful example. If you look at something like pre-COVID, if you look at even the last 3 years, Web of Global has actually been up 3 times in the last 3 years. You ask any investor, the biggest one, I can give you an investment which can be up 3 times in 3 years. If you ask them, they will agree, this is wonderful, this is pretty good. So to the person who invested in 2019, this is great, right? They tremendous wealth create. To the person like me who invested somewhere in 2021 after the COVID thing happened, the thesis was that because of COVID, their growth has been accelerated, and because of this accelerated growth, they will be able to justify a higher valuation. So even if I can buy it at 25, 30 PE, I should be okay with it because the growth was around maybe 45, 50%, the bottom line growth at that point. That was a mistake I made, right? I thought that the growth will be secular. But eventually, if you started looking at the quarterly numbers, you realized that the growth is actually not secular. The growth is not happening the way that they thought it will happen, the way that we thought it will happen. So their guidance was, even on top of that very strong growth, they will continue to grow the top line at, I think, 16 to 18% or something. But then eventually, what ended up happening after Q3 result, or I think Q2 result, I forget now, uh, of this financial year, is that they said that now our guidance is around 10% for FY22 and 13% for FY23. That's what they said. So again, it's very clear, right, that my thesis was high growth. That is not playing out. So my thesis has been destroyed. So then why should I stay invested? Right? It's as simple as that. And the interesting thing is, even after I sold, it has gone down maybe 20, 30%. So my point is that I was late in selling, but I could have been worse. Right? So in everything, we will be maybe 60, 70% right. We can't be 100% right in everything. To give another similar example where actually I managed to get off better is actually sequence scientific. So the thesis was that this is a pseudo FMCG company, very strong moat, very few players in animal pharma, and so it will be able to sort of continue to grow at 15%, 17% its top line and 20% its bottom line because of operating leverage for many, many years. And so it actually deserves a FMCG type of valuation. That was the thesis. And even today, if you actually go and read the value picker thread, what you'll find is that as an investor, I was trying to justify this thesis. कि ऐसा ही होना चाहिए. Because I was an investor, that was my ownership bias. But you'll find that the other side, like the people who were not investors, were pointing out कि ऐसा नहीं है. It is not a pseudo FMCG. It's an API maker, and API makers will face headwinds at some point. If not today, they will face it tomorrow. And that's what happened. They did face headwinds. They did face raw material pricing. The Turkey issue happened. Everything happened together, and the margins sort of went nowhere. And on top of that, to top it all up, the PE ended up dismissing the person who created the business, and the valuation, everything fell off the cliff. In my case, because I started to see the seller's side, the valuations have gone up. They have doubled. Valuation has doubled in a year. How can that sustain, right? How will it sustain from here? How will I be able to make 25%? For me, the goal is to make 25% in every investment, right? The valuation is doubled in a year. How will I make 25%? That is the reason I ended up selling even before any of the fundamental triggers, because I took the valuation call. The valuation बहुत ज़्यादा है and it will probably not go any higher. I couldn't see any triggers which can surprise me on the upside. I could only see that things can go wrong. So that's why I just sold it. And then the fundamental triggers happened and it fell back to 130, 140. That was sequence. Another example, because it's worth discussing together, is Saregama, right? Saregama, again, the valuation is high, but I haven't sold Saregama. Now, I might be wrong, actually, right? Like maybe it will also fall off just like Sequent and just like Webhub Global. That's where the importance of deep research and like keep reading comes in, right? Even today, what is the one thing that the user can do? They can go to Saregama's YouTube channel, look at their views and their subscribers, and compute the compounded annual growth rate over any period of time. You can compute it for the last 1 week, for the last 1 month, for the last quarter, for the last year, for even a single day. You can measure in every day how much the views have grown, how much the subscribers have grown. So, because it is the highest valuation company in my portfolio, I am watching it like a hawk. I'm going to watch it like anything, right? And even recently, that positive thing happened where the capital allocation changed. They started, they demerged the magazine business and the caravan business. So, there actually, you were getting some semblance of the fact that things can actually surprise on the upside. Because even if you look at the RPSG investor conference, they said we will do something on the capital allocation side for the loss making magazine. That's one point. Second, we know that as people shift from ad supported to subscriber, that will also add as a tailwind. Third, we know that today actually the number of music streamers in India is very low actually. I think it might be 300 million, the number of people that stream any kind of music. Number of internet users is 900 million. So there are people who are not streaming music today. The ad supported itself can go up 3x, right? All of these tailwinds are there. So to me personally, it felt like this is worth holding. So to summarize it in 2 points, if my thesis is not panning out, I will sell, right? That's clear. That happened with Webhub Global, and I mean, I had a loss of 25%, but at least I didn't have a loss of 50%, so I'm still sort of partially happy. Uh, Second, valuation. Valuation, we have to see the positive triggers and whether they can support the valuation. In Sequent, I could not find any positive triggers. In Saregama, if you just listen to the con calls and read the investor presentation, you will find at least 3 or 4 different triggers that are waiting to happen, right? QIP money, acquiring a new catalog, uppricing it, better capital allocation, subscriber shifting to paid subscriber. All of these tailwinds, all of these triggers are happening. Some of them continuing to happen, right? So that's why I didn't sell. So I hope that helps.
Yeah, Sahil. Thanks a lot. Sahil, maybe by mistake you made me a co-host, but do you need any help in hosting it, or
Yeah. It was
it was
it was by mistake, but I mean, you can stick around if you want to. Like, I don't mind. Yeah, yeah.
sorted? Sathik Dattatraya has requested maybe. Mr. Dattatraya, so do you want to approve him as a
Yeah. I mean,
speaker?
please feel free to approve everyone. Like, it's. But
Okay.
Kalyanji, I think, had requested, so please feel free to unmute Kalyanji. And then I think Abhinav, and then, Dattatreya. And just a request, I think we should, try to wind it up in maybe 10-15 minutes, because it's already been very long. And one of the complaints people had is that the recording is too long. I don't want to make this one very long. Otherwise, people will be like, yeah, who will listen to this? Yeah.
Yeah, hello Sahil.
Hi.
Thank you for accepting my request. And I'm a new to investing. Like I have been investing like for last 12 months. But I have picked few companies at very low price. Uh, I got the profit more than 100% for few companies, but I didn't sell at that point. So I just want to know at which point we need to sell exactly in order to put maximum profit. That's what.
I think basically it depends on like what our thesis was. Like, why did we buy, right? If you ask a swing trader would have a target, right? They would say ki 50%, 60%. Whenever their target is met, they will sell. That's their thesis. Because for an investor, the thesis has to be something tangible, like the earnings will grow at 20%, earnings will grow at 25%. Until my thesis is being met, I would never sell. If you ask me about RSEL Geartech, If they can keep compounding their top line at 25% for 10 years, I will hold it for 10 years. Why would I want to sell? The problem with selling is as soon as you sell, you have to think what to do about that money, right? Where to invest it. So I would prefer never to sell if at all the company keeps executing. That is the most important thing. Whatever my thesis is should continue to happen. As long as it's happening, I would never sell basically. Other thing is the valuation, right? That's what we discussed in the previous question also. Like if the valuation is such that it's discounting next 3-4 years of earnings growth and we don't see any positive optionalities or potential triggers, then again I would sell. Like how can I make money from here? So with that thought, I will probably sell.
Okay, got it,
Thank you.
sir. Thank you.
Kalyanji, please feel free to.
Hello. Yeah. Hi,
Hi.
Sahil. Am I
Yeah.
audible? Yeah. Thanks a lot for hosting, and also your Twitter threads are very informative. So please continue the same thing. So I also watched your whole session with Ishmohit the last time, the equity and job wala. But I still have one doubt and confusion still in me. So I have around 4+ years of experience into software development. So I recently switched my company. So it's in September I switched my company. So currently I have something around CTC of more than 30 lakhs or something like that. The confusion in me is that the people of my experience or the friends of mine or let's say 1 year more experience or something, what they're actually doing is they're actually continuously practicing the coding questions and also continuously studying the design rounds and all. And then switching to companies of more higher package. Let's say you already know the packages that are currently going on, right? 50, 60 LPA, and also companies like Coinbase are actually giving out 70 and 80 LPA for 4 years experience, right? So thing is that I only started investing from last 3 years. I only invested in mutual funds at the start, like index funds and also the Parag Parik and all. But from last 1 year, I'm in stocks also. But the confusion is that should I actually, just like my friends, start preparing for the interviews and all, the coding level thing, and or should I actually resign the con calls and also the focus more on the investing side? I'm equally interested in both the things actually, normal coding things and also the fundamentals, learning about companies and all. So this constant confusion is that which should be the priority for me. I'm sure that obviously if I switch my company, obviously for first 4 to 5 months I'll be focusing more on proving myself, learning about the internal services and all. And after 6 months, people are actually doing this. They're actually preparing for the companies again. Actually. My friends, what they're suggesting is that why to actually allocate that much time to investing, not just invest in blue chip funds and also blue chip stocks, and just concentrate more on upskilling or switching the companies and all.
Right.
So and also you're already working in Google, right? Apart from Google, also I think platforms like Scalar or many companies are actually what they're doing is they're actually inviting the already experienced guys and they're giving away let's say 5K or 10,000 for one session or 1 hour, something like that, right?
I didn't.
So what? So then they are actually doing it based on the FANG rated or whatever tag is there. They're actually having them as a mentors or just giving up sessions or something like that. So the overall point of confusion is that should I actually concentrate more on the job pitch or upskilling myself, increase my CTCs to like very good number, or should I actually spend hours doing listening the con calls or picking up the momentum or picking up value investing or something like that?
I thanks for the question and I think I sort of alluded to this earlier, but definitely a very important question worth answering sort of by itself. My opinion is always upskilling should be priority number 1. And I'll tell you 2 reasons for it. First reason is by upskilling, actually, we are contributing more to our society, right? That is how fundamentally we create good in the world. Like investing is for us, right? So it's a very I personally think it's a very at least in the beginning, it's a very personal thing. It's a very self-centered thing. Whereas with our work, we actually create value for the actual society, right? That's why I personally think if we can get promoted, that's like the best way. In terms of switching jobs, I think that's like a short-term thing because of COVID, that there's a too high demand, not enough supply and all that, right? Eventually it will settle down. and eventually the packages will also start to settle down. I feel like. So I think upskilling 100%, promotions 120%. If we can get a better CTC, that is also wonderful for us, right? And in a personal capacity, it would be wonderful, right? So again, I completely agree with you that like in terms of allocating time, because I'll tell you why. 30 lakh versus 60 lakh. The difference is ideally if someone has a 60 lakh package, for their entire lives now they will get 60 or more, right? So generally people don't have a lower package unless something goes terribly wrong. So obviously the 30 lakh one is 60 lakh one is far better because your lifetime value has doubled without putting any extra effort in the future. Whereas for investing, to maintain that 20-25% CAGR, we have to put effort again and again, every single year, every single day, every single month. So I personally feel like, given a choice, you should choose the uh, career path thing, right? And even in my own personal life, now in this team, I'm actually finding pretty good work. So I'm also spending a lot of time, lot of energy into upskilling, into basically building better software and basically driving more value for Google. And with the hope key, eventually I will get promoted because of this. So I think like everyone should continue to do that, and like there's nothing wrong with that. Yeah.
Okay. So thanks a lot. And so one more very small follow-up question. So you also at Google have opportunity to move to any country, right? Google at SWs can actually move to any country and they can work for the same
Yeah,
Google, right?
yeah.
So even though we all love Indian equities and all, so what is the point of not moving and still investing with the Indian CTC and all? Any
I'll tell you.
thoughts
Yeah,
on
I'll
that?
tell you 3 points. First is actually
Yeah.
family.
Okay.
So my family is something that I really want in my life because again, it's like everything is a trade-off, right? If I go abroad, I don't think my parents would be comfortable coming with me. So like then I have to meet them once a year. That's maybe total of 20-30 meetings until their entire life, and then they will go away, right? That
Yeah.
thought scares me.
Correct.
That I want to spend more time with them and not be completely money minded. Like, of course, I would prefer to have a good lifestyle, but if it's at the cost of spending time with family, like that, for me personally, doesn't work. That's one point. Second point is you're right that the CTC is higher outside, but there are two more things which are much, much higher. First is rent. Rent in India is dirt cheap compared to what it is in abroad, right? You'd have to spend, even working at Google, you'd have to spend 10% of your salary just on rent, right? So rent itself will eat away.
Correct.
Second,
Yeah.
in most of these developed countries, the taxes are also much higher. So it might be up to maybe 50%. In India, it's like 33%, 35% or something. Even the highest tax bracket, including all the cess and all that, right? Whereas abroad, it would be 50% taxes. So I have actually done the analysis. Generally, you will save more, but not significantly more. You might save 50, 60, 70% more. Another important point, for simple things like cooking or cleaning the house, you'll have to do it yourself. Because again, even Google engineers cannot afford to have a household help abroad. So there are actually like the last aspect actually is the social life, right? Like in India, we can speak in our own languages with people. All of that goes on. You have to be formal or maybe understand their cultural references. It's a huge change. So I feel like it's yeah, not for me. I might still go abroad, maybe just for the experience, but it would be like a very short term thing, maybe 1 or 2 years, and then come back. Yeah.
Okay. Thanks a
Thank
lot.
you.
I think it resolved my
Yeah.
confusion.
Thank
Yeah.
you. Thank
Thanks.
you.
All the best.
Yeah.
Yeah.
So I think Abhinav, do you want to go next? Abhinav?
Hi,
Hi.
Sahil. So that was a beautiful answer, the last question. So thank you for
Thank you.
that. Yeah. Also, I don't know if you're still getting, but congratulations on your marriage. Anjali ma'am actually happens to be one of my seniors
Oh,
in
wow.
college. Yeah. Anyway, moving on to the question. So you talked about balancing investment with job, and you talked about Vaibhav Global as one of the examples of taking a loss,
Hmm.
right? I want to understand. I like to know how. I mean, actually, when do you start researching for that? Because we all know that we start researching for getting into a company, but when do we start researching for getting out of the company, and what are the psychological effects
Hmm.
of that? like taking a loss might be very difficult for some people mentally, right, and balancing it with job, it might show up in your daily life as well. So I want to understand that psychological part of it.
Right.
Yeah.
And I'll answer it in two ways. One is ki we should start researching for getting out the moment we get it. Right? I mean, the antithesis and the risks should be as known to us while we are clicking the button to buy. Right? It should be known to us completely. Everything that can go wrong with the company, ideally, we should know. And just as we keep updating the thesis, we should keep updating the antithesis as well, right? With time. And stay on top of what can go wrong. So that when it starts going wrong, we don't have to waste any time or effort in processing that information. It should be just a simple match. Ki X could have gone wrong. I can see X going wrong, and now I'm going to exit. It should be ideally as simple as that, right? So kind of trying to pre-compute all the things that can go wrong. I'm sorry, but did you have a second question also?
No, I just wanted to understand the psychological part of it. So yeah.
Yeah, that part. So I personally feel like if someone has that uh, sort of knack, ki it's hard to take loss, it's definitely worth not doing direct equity investing. Because think of it this way, right? If you are in a company, sometimes the price will go down, sometimes it will go up, right? And if you're in a value sector, like where there is no momentum, it will go down. Like if you look at financials, anyone can buy any financial and it will go down in the next 1 week, 1 month. With that knowledge of the pain, I'm still buying it because I find value there. And value will keep being value until it starts becoming momentum. When that will happen, nobody knows, right? But we can only predict that it will happen. For example, FII is selling, going out of India. Eventually, they have to come back. What options do they have? What is the alternate? So when they come back, financials will start selling again. But my point is, we don't know when that will happen. But I mean, if I wait, when they will come, then I will do. That's not a good choice either, in my opinion, because until then, one of the stocks, maybe the one we care about, might have already gone up 20-30%, right? So
Correct.
we
Yeah.
have to sort of, in my opinion, be slightly detached from the stock price because it's like, again, imagine if someone kept giving quotes on your home every day that today I'll buy it for 80 lakhs, tomorrow someone says I'll buy it for 20 lakhs. You're not going to be depressed that, oh my God, today I'm getting a 20 lakh quote. You'll think, I know the value of my house and I'm going to, be chilled out about it. Similarly, I think for our stocks also, we have to be very detached from the price in the short term and focus on the business direction. If the business direction is right, eventually price agrees because everyone wants to make profits, right? You are not the only one who sees that. Others will also see that, right? Ki the value is there and companies doing good work.
That's
Yeah.
true. Yeah.
So yeah, thanks a lot, Abhinav. I think this is a good time to end the AMA. Thank you everyone for attending. Um I want to end it soon because the complaint against the session with Ishmael was it was too long. So I don't want to make this very long. And thank you, everyone. Have a great Sunday. And yeah, see you in the next AMA whenever that happens. Thank you.
Thank you.